Okay, I'm just making this quick video because I want to share the thought process of these two trades. And it's not about why I entered in these trades, even though I can quickly talk about why I entered in the trade, but more so of the thought process that I had while I was in this trade, when I was taken out of that trade, that led me to taking the other one. Because I've always mentioned that trading psychology is not as complex as people make it seem. It's insane how much people say, oh, trading psychology is the problem. It really isn't. Because trading psychology can be broken down in a very, very simple manner. Emotions equals reality minus expectation. I've talked about this multiple times. I will talk about it in the bootcamp. I will talk about it in a free psychology course that I'm going to launch. I'm going to talk about it in many things. Right? So it's for you to understand how I implement that exact same thing. So first of all, let's quickly talk about why I entered in this trade. So basically, I was seeing this as London manipulation. Once the market starts to confirming to the upside, when the daily bias was bullish for myself, I entered in the trade. Instantly, it went into very nice profit, like 0.5, but 0.5 was also equal to 15 pips in a matter of minutes. And then the market was ranging around a little bit at this 15-minute fair value gap and then moved to the downside. But one of the things that I noticed is that we were basically just coming down towards the 4-hour fair value gap right here. I saw that from the get-go. And so what I was saying is that, so this was on the day, looking for a bit of a power of 3, expecting the move to the upside today. Negatives. We have already moved 50 pips. Asking for the market to move another 50 is not an easy ask. If you're looking to execute, keep that in mind. So basically I'm saying is that if you're executing right now, understand what you are asking for the market to do. So I'm already telling you one of the reasons as to why this trade is going to be a loss. Why any longs today are going to be a loss. I'm telling you that, right? Then I said, new 1 hour and 4 hour candles now, and then let's go into the trades taken tab and let me show you. So I said I'm in on GU, I'm in on GU, protected by the 1 hour fair value gap and a bit of the 4 hour order block that allows for the power of 3, which means the market moving a little bit lower before it moving higher, going to the 4 hour order block. And then I said that I'm still at break even basically, and that the trade is still at break even, and it's at the 1 hour fair value gap right now, also at the 4 hour order block. There is a chance that I get tagged out and the market still moves in the direction that we forecasted. So what am I saying? I'm already saying I'm going to be tapped out and then the market is going to move in my direction. So the worst case scenario that I'm saying, that is getting tagged out and the market moving in your direction, I'm already forecasting that. So then price could close the 4 hour fair value gap in which I would be tagged out. Again, I'm giving reasons as to why the market is going to do what I don't want the market to do. Why? Because then that's a stop loss for me. If the market reverses after the stop loss, I will re-enter. I'm already putting myself in the winning position that, hey, the market might do this, and if it does, it is what it is. I'll re-enter again. I don't care. If the analysis is still that the market is bullish, I will re-enter. I do not care. Therefore, I'm okay. So that's a stop loss for me. If the market reverses after the stop loss, I will re-enter. Let's go back to the FX tab. And I said still overall bullish. New York manipulation now in play. We'll look for long if we get confirmation. Waiting for the 15-minute close and hourly. So this then I jumped on a call with everyone inside of the Simple Trading Edge. Then market is still fine, looking good to the upside. So again, I was already marking my position and I was already seeing the market moving up, respecting the 4 hour fair value gap. I'm ready to execute on a good close, looking to execute basically at this exact level. And then that's what I said. I'm in on GU again. I'm in the Metro because I was stressing because I was always losing. I was not able to execute on my trades. I was stressing in the Metro, had no mobile data, and then I was able to execute. Again, this was the entry on GU, the second entry. And then I said closed only for 1.14R because again the target was 1.8, but I gave multiple reasons and I called myself a bitch. So I'm not at the computer, a lot of volatility, Trump is still speaking, I'm being a little bit of a bitch, and I basically got the trade back from the morning. So better to finish off a day in a tiny bit of profit than nothing. So that was basically it. I primed my mind into already expecting the worst case scenario. So once it happened, how do you think I felt? I lost 1%. How do you think I felt? A lot of you would be tagged out and the market would move in your direction and you would be cursing at the market. I would be like, okay, the market decided to do this. If I want to if the market gives me another execution, I'll just execute again. Like I was already ready to do that. That's how I prime my mind into making me profitable. And that's the big difference between a lot of profitable and unprofitable traders. Is because you don't understand that your mind is there to serve a purpose. And what you have to do is you have to prime it in the way that makes it the best thing possible for your trading. Oh, I need to buy this trading psychology course. No. The only thing you have to do is you have to understand emotion equals reality minus expectation. Reduce your expectations. You can't affect reality. There's no law of attraction here. So, with that being said, that is it. Peace. Hope you enjoyed this lesson. Click right here to watch the next one. And if you are struggling with overtrading, then click right here to check out Trade Blocker. Peace.